Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again back to the channel. This is the Greedy Trader channel. For those of you who are new, this is where we talk about all things market profile, trading, everything you want to know happens right here. Now, for those of you who already know me, well, this is just another video, but one of the things that you will find when you come here is just pure authenticity. What I don't do is I don't mince my words. I don't teach you stuff that is crap, that doesn't work, that you're going to go away thinking, what the hell just happened? That is just not something I do. You will find out there's a ton of this kind of stuff, and you know, well, what can I say? Wherever there is something like trading that potentially involves a payoff that sometimes can be bigger than payoffs in other industries and in other works of life, you're going to find fraudsters. It's just what it is. There's like literally nothing we can do about it. But if you come to this channel and you're here right now, then congratulations, you found yourself something that is, I can guarantee you, is going to be useful to you for the rest of your trading life. If you're just learning, if you've been a trader for a couple of years, maybe it hasn't worked out for you too well and you're just looking for some reinvigoration, then you're in the right place. And I know you guys know what I mean. Sometimes in this business you need to be reinvigorated. I think this is true for traders like myself, whether you've achieved the stellar heights of being a trader or you've just started or you're kind of middle of the road. I think every trader universally, regardless of their status, can guarantee that they're going to need at some point in their trading journey, they're going to need some reinvigoration. And that is kind of what you get here. But guys, today I wanted to talk about volume analysis, and finally it's happening. I've had a lot of requests for it. Is that, can you do this on a stock chart as opposed to a Forex chart? And I know the vast majority of you guys watching this, you love Forex and you couldn't bear to watch anything else other than Forex because the only thing you have access to trade is Forex. Well guys, it's not exactly true.
That is one big pile of shit.
Forex is not the only thing you can trade. Even the CFD brokers have stocks that you can trade on the MT5 platforms. All you need to do is download the MT5 and you have a full roster of NASDAQ stocks. So there's no reason why you cannot trade stocks. Yes, the leverage isn't the same, but stocks are far more volatile and you're still getting, you know, 1:20 leverage. So you don't have any excuse. And what I always say is that if you're a beginner in trading, you probably want to start with stocks. No offense, guys. I mean, Forex is great when you've built up the experience and you know what you're doing. I mean, it is still hard, even that, because the reality in Forex is it's a completely different market. It's what I describe as a symmetric marketplace as opposed to an asymmetric one like stocks. I mean, you could risk a point on a stock and capture, you know, 4 times that amount, and you can do this on a regular basis. I mean, if you are a stock trader in the small cap world, I mean, you can make a 10x trade, like, and this could be something that happens consistently because there are 5,000 stocks, right? And, you know, the reality is that some of them are not very correlated to the S&P 500, for example. Again, another symmetrical market in terms of index futures. So I think the idea is to broaden your horizons. If you're going to succeed in this business, you need to broaden your horizons. And if you're not doing that, you're never really discovering an edge. Anyway, I'm not going to turn this into that kind of a lecture. This video was going to be a little bit more about how do we trade volume analysis, because I've had a lot of people ask me about volume trading, volume analysis, and I'm like, well, if we're being realistic, right, volume analysis has probably been around since the late 1800s, right? So the birth of the stock market, right? Post-industrial revolution, people have been using volume to trade, right? And there's a reason for that. Is because all volume was back then, it was the ticker tape, right? So it was just the transactions that are recorded, because obviously in the stock market, volume is reported. So the transactions that have been done get recorded on what was called the tape. Today, the tape is electronic. It's still very much like that. If you guys are aware of level 2 order flow, time and sales, that is what it is. The time and sales window is technically the tape. So even though it's changed over time and algorithms now involved in terms of placing orders in the central order book and so on, it's still the same. You're still getting the exact same feedback, which is what transactions are going through right now. Some people might teach you about level 2 order flow, and they don't tell you that, well, if you're a stock trader, you need to be able to see the time and sales. Or we might start like here. What I'm going to talk about today is level 1 volume, and you're going to see how impactful this can be and how it's potentially going to change your trading life once you start to take this on board. But what you have to realize is that there are a lot of charlatans out there, no offense guys, who are going to probably teach you this stuff in pieces, and it's not really fair, because if you're going to understand volume, first you need to understand level 1 volume. So that's essentially the aggregated volume that's traded over the day, what sometimes is described as float rotation. So you want to be able to see that first, and then if you're an intraday trader and you're active through the day, you probably look a little bit more at the level 2. But that really just gives you an idea of where passive orders lay. And by passive orders, we mean orders that have been put in. So your limit orders, your stop orders, you can see those led either side of the book. So you can see those trading at the bid and the offer, and you can also see the actual trades going through. So it's another depth of order flow analysis, right? So it's another depth of volume analysis. And then you can see a little bit more, let's say, defined, aggregated information in terms of footprint charts. So people who like to use footprint charts are really trying to accumulate the same kind of data, but they want to be able to visualize it in a more understandable way. But first you go level 1, then you go level 2, and then the next step should be time and sales, right? So time and sales is where all the trades get recorded. So every single thing that goes through. So a lot of people look at the tape because, one, they want to see how aggressive that tape is or how quiet it is, and that gives the sense of how busy that specific stock is or that market is, and it could really give you a sense of what's to come. Others would look at it to see if there are any big clips trading in that are potentially going to move the market higher. So it's actually really, really holistic when we start thinking about volume analysis, if we don't think about it from a one-track point of view. There are some slight differences. Like, for example, in Forex, we talk a lot more about tick volume, right? So because, again, Forex doesn't have reportable volume. But I say that, but you can actually find reportable volume by looking at the ETFs that underpin the currencies, for example. They report volume because they're traded like a stock. Or you can look at futures, which report volume based on the futures contracts traded, right? So if you look at pound sterling FX futures, for example, you're going to see a correlation to spot, but you're going to be able to see the contracts trading there, right? So that gives you a sense of where the market is going if you are primarily a trader that focuses on volume analysis as your key metric to get into the market, right? So again, that's just like kind of a summary breakdown, but let's take a look at charts, right? So we're going to go a stock. I'm going to take the stock here, AMD, right? So the first thing you want to do, right? And when you start looking at volume, and you start looking at volume as a way to start to position your trades, is you want to work your way in. You want to start initially with the further out time frames. So for the purpose of this particular video, I'm just going to start with the daily chart, right? So here we can see that the first thing, actually, let me rewind. So the first thing we're going to do is we're going to map out the areas with the highest volume or float rotation. So what do I mean by that? Right, so we got a couple, right, that really stand out. So remember, we're far now in the future. So everything is historical to the left of the chart. We already know that. Now, the good thing about volume analysis is that once that float rotation has been recorded, it doesn't really change, right? We know for a fact that there was interest there, and we can also see what that interest led to in terms of price rise. So, for example, let's say we had this volume down here. So let's zoom in. Right, so we can see that very clearly. We can see there was very high volume on the 4th of May 2023 in AMD, and we can see the result of that is that AMD moved from a rough, or let's say an average price of $82.50 and moved to event before we finally start to see signs of a sell-off to about $129 as an average price, and then we start to pull back. So the first thing we want to do is record that initial volume that created the boost. Now, question for you guys: who are the biggest players in the stock market? We already know that. Pension funds, asset managers, people with huge amounts of capital, all the biggest money in the world. I mean, you just have to turn on to Twitter. I mean, even Nancy Pelosi is rocking those call options, right?
I made a tremendous amount of money. Tremendous amount. It's ridiculous. I mean, I don't even believe it myself. You want to know the truth? I don't even believe it.
So all the people with capital, the biggest players, they're not trading Forex, guys. They're not interested in Forex. In fact, most of the professional traders I know would tell you that there's no edge in Forex, right? They're not interested because it doesn't have the same kind of edge as the stock market. For those of you guys who know me, you know that I cut my teeth in Forex, but eventually now I'm a huge equity trader because I manage a fund. But not only that, I sell option premium, right? So a lot of my business now is done in the equity markets as opposed to the Forex market. But it doesn't mean that, you know, if I see a good Forex trade, I won't take it. I've done that before. I mean, people on my Discord server see me do it. Because again, with Forex, it is hard, it is difficult, and why would you want to do something that is hard when you can do something that is a little bit easier? And I'm not saying to you guys, don't trade Forex. If you love Forex, then trade it, but just be aware that it's going to be tough, it's going to be difficult, and you're going to have to put more effort than if you were trading stocks, for example, right? You know, that's the reality of the situation. But in any case, right, back to where we were. So you can clearly see that we had that expansion, right? So historically now we want to map out that volume that we can see, and now that's given us some information. So we can see historically now this volume is good, or this area is going to be a place of reference, right? So if we want to purchase AMD, closer to this volume should be what we should be looking at. The next step is we want to, of course, map out the other areas of interest. So we can see volume peaked here. That was a sign that we were going to start to sell off. Float rotation is actually really, really high, even relative to the demand side here. We can also see a similar, and again, guys, going back to the principle of liquidity, what do I always say to you? That determine whether the market is at a premium or a discount. In stocks, it can be harder to do because we have a bullish bias. So usually it almost feels like we're always trading a premium. So it's a bit disingenuous if someone says determine a discount or premium. So what I'm asking you guys to do is to determine a relative discount and a relative premium, right? So something that you can look at within a reasonable time frame. I like to say anything within sort of a month to a quarter tends to be a reasonable time frame. So if you've observed a month to 3 months worth of price action and you've seen a definitive high and low, usually determined by the volume, as you can see here, then this means that anything round about this sort of price area is going to be a discount, and anything about this area is still a premium. So just bear this in mind. So first and foremost, we want to map out all these areas. So again, we can see another massive float rotation. So I'm going to consider this a premium, right? So largely the people active here are going to be sellers. I think only like a professional, guys. Professionals understand that they're sellers people are going to be sellers at the premium. So the smartest traders in the world are going to be trying to sell when the prices are high. So they're going to be trying to short. And they're also going to be trying to buy when the price is at a discount. That is it. So if you think like that, you won't get into trouble. So you can see that the volume here is quite peak, right? So again, we see that drove us lower. And then as we start to drive into fair value, I start to consider these now to be some form of buying volume, right? So we can start to map those out. And then obviously as we grind to the lows, we can see that there's no other volume with the exception of the volume here, right? So this is typically, so if you're on the internet a lot and you hear people talking about demand zones and supply zones, really what they're trying to say to you is that this is where the float rotation has been the biggest, or this is where the volume has been the biggest, and that's denoting a form of demand and supply in terms of real reportable volume, right? This is why I love the stock market, is because you get real reportable stuff. Yes, it can be manipulated a little bit here and there, but the truth of the matter is that what you're seeing is what you're getting, right? So there's no real sort of delusion about it.
I can see what's happening. What? And they don't have a clue.
So we can see, historically, we've got all the interesting demand and supply zones. Yes, of course, there are going to be others, you know, there's that story. But in reality, we can clearly see that this is the most relevant map based on the high float rotation we're seeing. So now, if we're going to get involved, we can now start to overlay this with some other concepts. So as we drive into a discount, are we seeing any liquidity hunts? So we've seen a couple, because on the way down we've seen the intent, but as we traded into the discounted area, right, another way to determine this is to maybe use a Fibonacci tool, is you can just draw this from top to bottom, and anything under 50% is technically a discount. I mean, that's just common sense. If you look at something 0 to 100, and well, then anything under 50% is pretty cheap if we were to rally back to the top, right? So I would expect a buying interest to start to develop under the 50%. So again, what I'm saying is that sometimes when we look at a relative premium to discount, we don't want to be buying if we're not in a full discount, so basically under that 50% mark, or we don't necessarily want to be selling unless we are above that 50% mark. Okay, so if we're going short, I like to have a genuine bullish bias in stocks, so I prefer to buy than a short, especially valuable companies. If you're going to short something doesn't have a lot of value, right? But because again, you can get caught out. So because some of these positions we have to hold them overnight, you don't want to be in a short position if you don't have to. There's always an opportunity to buy in the stock market. So again, we can see that, and as we drive into the discount, we see that first evidence of a liquidity hunt, right? Something that's going to be meaningful, and that is preceded by the high volume that we get here, and we can see the net effect of that. Now, there are a couple of interesting things that we're going to take note of, right? And this is another way we use volume. Now, we can see that the supply interest here was quite heavy, right? And that was going back to the 2nd of August, 2023. And then we can clearly see as we push that demand here. So we've seen demand in two places. We've seen it here, right? So we've got a demand zone here that we kind of traded around. So it didn't feel like it held up much. But we can also see the demand zone here that pushed this market up, and then we broke the supply zone, and then we started to hold and close above. So you can see the market holding, bouncing, closing, and then preparing for another run. So now what that tells us is that the largest float rotation today that we think as sellers are likely getting squeezed at this level, providing they're still holding on. So that's what we talk about when we talk about a short squeeze, because we're seeing that where the dominant short interest is, and we know it's short interest, we're not going to argue about this because the market went significantly lower off the back of that supply zone. So now that we're popping above, it's telling us that either these guys are no longer short, so they're no longer reasonable short interest, or they're going to get squeezed, and that means we're going to get a much bigger price rise, right? So this becomes a relevant area if you're thinking about buying for a break to the upside. This becomes a relevant area we want to consider, especially when we started a base and then we had a strong open and moved higher at about 124.50 average price. So you could be long here on that basis. Now, it's the only time you will see me say that you're getting long at what is a relative premium price at this point, because as I said to you guys earlier, stocks are different from Forex. In the stock market, assets are always going higher, right, because of inflation. So as long as that's happening, you can potentially be a buyer at various different levels, and that's why we need to understand the volume side of it. So we can clearly see now that demand is taking control. We've broken the sellers. Now, if these sellers don't hold, what are the chances that this seller is going to hold? Virtually nil. So we know that this can be a trade we can hold. So hopefully this made sense, right? And you can see the power that's coming with that, right? So let's backtrack a bit. So we've seen lots of demand. So we can see now, if we look at where we are now, historically, we go back, we can clearly see that we have another demand area developing right here based on the float rotation. And we can also see, so we're going to map the ones that are significant, right? So I'm looking for volume areas that are higher, right? And we can also see there was what appears to be, right, supply side, right here, right? And then we look again, we can see, okay, well, the next relevant one was this one down here, which was on the 31st of January this year, right? So we've got sellers clashing with buyers here, right? Which is why the market is consolidating, is because we've got a strong demand area at 163, and we have a strong supply area, which it looks like we've done a bit of a liquidity hunt, and we're trying to push lower. Now we know AMD is still a valuable company. It is trading what seems like a very high price. We're looking at demand zones now much lower, 122 and 133 average prices. So what we're looking for is, well, is this going to dip down into these price levels? Now this becomes a great sort of price area to buy if we come lower. Now the thing though, right, and this is the caveat, is that we've tried to push lower, we've hit this demand area, right? We gapped under it slightly, but we closed back in at 164 and then gapped up the next day. What does that mean? It potentially means that we're going to go for another run, right? And this is it, guys. This is it, right? Now, if you're thinking about the market in this context, you're not going to struggle, right? Because you're using real data. I mean, volume analysis is game changer. It is a complete game changer when you can do this, and you can do this very well, right? Because then any other idea or any other strategy that you're trying to weave in, you can now do it with a lot more efficiency if you understand this aspect of things. It is rather astonishing how many people come into this business not fully understanding volume analysis or how to do that aspect of volume trading. So again, I hope this has been really interesting, and it's been very clear to you guys what you are looking to achieve as someone who looks at volume as your primary tool to enter into a market. Now, I've used a daily chart of AMD. In future videos, I'm going to show you this on smaller time frames, so 1 hour chart. I mean, again, with the stock market, you can go quite granular on time frame because of the way stocks tick. You know that it's just different from Forex, right? If you're trading a 1 minute or 3 minute Forex chart, you're probably a degen. However, if you're trading a 1 minute or 3 minute stock chart, every good stock trader will tell you that, well, yeah, now you're getting into business. It's the toughest side of the game, but now you're getting into business because now you're getting into that granular order flow. Once you start looking at 1 or 3 minute charts, then you need to start looking at level 2 order flow. You need to start looking at time and sales, because the reactions are going to be fast, right? You know, it's not an exact science, but it's doable in the stock market, something that I can't say, for example, for the Forex market. That's kind of where we are with this idea. So guys, I hope you enjoyed the video. Like always, I look forward to seeing you on the next one. You know what to do.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?